Welcome to Follow the Money. Today's best of compilation focuses on seizing opportunities in the Philippine stock market, luxury real estate, and the electric vehicle revolution. These episodes of the program were the most searched, shared, and celebrated for their industry-changing insights and actionable advice. Let's get started. Amid market uncertainty in 2024, retail investors turn to experts like Juanis Barredo for guidance in navigating the Philippine stock market. Juanis Barredo's deep dive into stock market fundamentals empowered thousands of investors this year to maximize their market opportunities.
I think it's important that people prepare themselves first mentally because of course, investing is a challenging ordeal, especially for those newbies. Preparing what they have to be able to invest is the first thing they should do, maybe a certain percentage of what they get to save as an investment, and then prepare to do that investment over time as against just putting it all one time, big time. And then, of course, take some time to be able to learn about the investment you're about to make. Study some of the companies that you're going to be investing in, or maybe even funds if you want to go through mutual funds or UITFs. And do understand that it takes time for companies to grow. So some people begin with the wrong expectation, thinking they will make 50% of their money instantaneously. That doesn't happen here. So it takes time for prices to appreciate. And to also understand that the riskiness of markets will really be generated because of volatility, and that's something else that they should prepare for before getting started.
Certainly, that's a lot of warnings, but in recent days, this kind of rally at the stock exchange, what kind of gains have you noticed recently?
Well, it had become broader in the beginning. It was very, very selective, starting off with some of the telco stocks that started to jump out quite strongly, and it was quite remunerating for a lot of investors who've been there for quite some time. And it started to broaden up, especially after the rate cut managed to be able to unfold itself here in the Philippines. And I think that was really what everybody was really waiting for, because it signaled that the period of high rates is about to subside, and that bullish front helped quite a bit of the market.
You know, it's good that you're making qualifications about the timing of particular investments, especially since it's so easy to get into the stock market and, you know, get disillusioned by how much time it takes before you start to see gains. How should a retail investor then diversify their stock portfolio in the Philippine market to mitigate risks? What are the most promising sectors, perhaps, in the Philippine stock market right now?
Well, I think it's important for them to understand what they have to look for. I guess the most important thing is to be able to follow earnings. And that means just make sure that the company you're getting ready to be able to invest in is doing well, and the essence of their growth is all intact. So earnings has to be there. It has to be doing quite well. If earnings is coming out better than anticipated, more likely you're going to see appreciation into that stock rather than have to wait too long for it. So yeah, I mean, earnings is one of the biggest factors that you probably would want to be able to see. And right now, the market's watching things like power companies, very selective on the consumer stocks. REITs are also very much in mode right now, because coming from a high rate period that's coming back down, REITs may become more attractive for that. So, you know, we like names like Meralco, Jollibee, Oitis Power, and AREIT being some of our research heads' favorites.
Definitely, company performance affects the valuation of the stock, but also we have geopolitical and local economic indicators. Given the current landscape, what kind of tips would you offer to earn from Philippine stocks?
It's, I think, very important to be able to diversify right now, because like I said, although you want to be able to to make sure that you're participating in the ability of the market to recover. Not everything is all climbing at the same time, so you're going to have to be able to have a broader type of cast. Your net has to be able to capture quite enough for it to be able to make sure that it partakes on some of the industries that are doing better. And so, for example, some of those that I mentioned earlier seem to be doing okay, and those that a bit are hurt, but let's say by high rates, that might take some time to be able to adjust itself, or there are certain worries about properties because of the POGOs leaving. So it might take some time maybe for the other types of property issues to follow. But I am seeing some advances as well, so it's nice to see that. The second thing I'd also say, aside from being diversified, is I think you don't have to be extremely over-positioned right now. Always make sure that you're underbought. That means that you have some spare cash on the side, just in case the market decides to show a hiccup or a pullback, where you can take advantage of that type of decline and buy into these particular stock favorites that you're currently looking at. Because I will continue to see shakedowns in this market because we're not extremely in a bull market yet, and there's still some headwinds that people will have to talk about.
I know that for beginner retail investors, perhaps they may not be as courageous to enter the international markets or equities just yet. But meanwhile, have you or do you think international events like changes in U.S. interest rates or regional geopolitical tensions, have you seen them impact, or are they expected to impact the Philippine stock market? Lots of people watching the U.S. elections right now.
Mm-hmm. Yes, I think two significant events will really cause some gyrations into the market. First will really be the U.S. Rate cut that is anticipated in September. Although everyone's expecting it already, I guess what people are talking about is how much of a cut. So if the size of the cut is bigger than what is anticipated, and I think that might cause a bit of a hiccup into share prices. So if they're just cutting rates little by little over time, and that shows that they're very much in control of the situation and that they're not worried about any economic slowdown that might come as an aftermath to this. And I think markets shouldn't really, choke too much on that. It's if they start cutting fast that people might say, "Whoops, something wrong is happening," and they're being quite aggressive in their ability to cut rates. I think that might cause the market to worry a bit. Elections, not so worried about that. We've seen elections come and go, and normally after election periods, markets in the U.S. normally go higher after a little bit of volatility, so not so much worried about that.
Are there indicators or signals that investors should be watching out for when deciding to enter or exit the market? Is there a timing that you're following?
Well, I think on the macroeconomic side, the most important really would be anything that will affect fund flows. And so when we mean fund flows, we're talking about things like interest rates, the direction of the market, any particular risk that may come in that might subdue the ability for fund flows to come in. Because if we don't have money coming in as investments into the market, then our market might just move sideways, if not just drift down. So it's essential that we should have a good degree of that. Second is, you also want to make sure that the companies that we're looking to buy has all the necessary ingredients to be able to create that fund flow inside its situation. So, for example, I think the picture you're showing right now is an example of what we look for in a company, and we look for gems. And that means we want to make sure that the company is in a growing industry and its earnings is picking up instead of slowing down. Management is something that is not even questioned, because everybody in there is an expert and they know how to handle even things in a risky period. And of course, they must have a durable product or superior service or product, so that we can make sure that nobody comes inside to steal their thunder, because everybody's going to want to come back into this particular type of product as a consumer. So if you have all these necessary ingredients and your macro sides are all quite positive, I think that should be quite subsisting to keep those particular stocks or the market under which they're involved very much into the upside.
Proptech innovations revolutionized the real estate sector in 2024. This segment highlights how Filipino startups are changing how properties are marketed and managed. Riva staff's O.J. Lopez discusses how digital platforms streamline property transactions, bringing transparency and efficiency to the real estate market.
Our platform could be complementary to these big platforms, and the biggest platform in the U.S. actually acquired a company just like us. No, and that's actually part of our roadmap. That maybe competitors of those big platforms can we can partner with, or that could be an exit strategy. We don't know yet, no, but that's the potential of the space that we are playing in.
Right. I know that you have about 3,000 users and then some about 20,000 properties across the U.S. But and I'm also looking at AI possibilities for yourself and looking through viewers. How is that translated? And these customer marketing investments through RevaStaff, have they improved the final selling price of their listings this year? Are there certain trends emerging in real estate media that realtors should be investing in?
For sure. So these trends, these trends were, as I mentioned, sprouted during the pandemic, because of the limitation in mobility. However, today it now becomes a standard issue. Hence, there's still a huge gap of adoption in this technology, although this is trending upwards. So that's what we are really banking on. And then as to if the listing price, if you would be able to generate high quality content, the listing price, they would get what they're asking for, or even higher if there would be multiple bidders in that property, multiple offers. So those are the things that we see for the realtors that are successful in using these types of technologies.
You've been recognized at the Toronto Tech event in 2024 as a rising Philippine startup. What does that recognition mean in terms of your company's growth, and how will it benefit your clients' bottom lines as you scale?
So definitely that's something that we are very proud to represent the Philippines. There's only very few startups, actually just 4 startups who were there from the Philippines and in that event, and having that global audience to actually look into Filipino startups and what the technologies that we can offer. And definitely when we were there, we saw the potential of Filipino startups can actually compete globally.
With global attention on sustainable transport, 2024 marked a year for the EV industry in the Philippines. This clip explores its growth potential and challenges. EVAP's Edmund Araga paints a vision for the EV future in the Philippines, showcasing how the country is positioning itself in the global green revolution.
11 peso to 12 peso per kilowatt per hour is the charge of an electricity, And then you would charge it for 4 to 5 hours and a full charge. Normal car right now, the average range of the cars are 300 to 400 kilometers on one charging. And you can use it like if you're using it daily, like for 30 to 50 kilometers a day, you don't need to charge it every day because the power supply is still there. And that you would have big savings in terms of the cost. On a gasoline fed, like 65 peso per liter, charge, you would have to power up in the fuel and then multiply by 20 liters. You would just use it for a number of period, and then it would cost you more. Now, in terms of maintenance, electric has a low maintenance because there's no change oil and other parts and components that have to be maintained. Unlike an ICE that you would have to Make a budget quarterly, an average of about 50 to 20,000 per quarter, or say 5,000 to 10,000 kilometers that you've used. So you have to visit a dealer and then do some PMS. So there's a big difference in terms of basing it on a long-term goal that you would have more savings in using the electric.
Edmund, we talked about how there are zero tariffs for, or at least minimal tariffs for, the EVs coming into the Philippines right now. But
Yes.
we also know that we have geopolitical issues coming up. And of course, we're expecting that the chips that power China's tech will also affect the chips that go into these cars. Do you see upcoming challenges affecting the incentive of EV owners to buy, to keep a car, an EV for themselves?
I don't think it would be a barrier on our part because we have also other options like ASEAN countries. In particular, we have those ties with them. We can be able to manage to get some supplies from the ASEAN market, from Thailand and Indonesia, if there will be some geopolitical issues that pertain to Philippines and China. And that's why we have some alternatives that we can look forward to in anticipating of such prevailing problem. No? So nothing to worry about it. And then that there are a lot of options to look up into in solving an issue.
Edmund, what about, let's take a look at the behaviors and beliefs of Filipinos. How do Filipinos currently approach the purchase of EVs, maintaining them, registering, and even reselling EVs? Are there misconceptions or barriers that still hold back the market from booming?
Well, one particular is that all the main proponent is like, oh, it's all made in China. No. The hesitation of buying a certain car or an EV is always made in China. But they are already mistaken that even the branded ones are all made in China. And the confidence level is there. That's why at our association, we come up with addressing the concerns on the regulations and standards for us as consumer can be protected as safety, use the unit, and addressing concerns of safety, addressing concerns of regulations, and addressing concerns of the infrastructure. So we make it a point that we see to it that all are being addressed in order for it to be at par or leverage with the ICEs right now. And the direction of the auto industry is really into electric. So that's why we have to come up with a lot of terms that we can anticipate on in the future future needs ahead.
Very, very quickly, what is the resale value of EVs compared to traditional cars? And are Filipinos willing to buy second-hand EVs, or is battery degradation a deal breaker?
Well, in terms of resale value, there's a big question for at the moment because we haven't gained ground yet comparing it to ICE. But in terms of the confidence level of the lithium-ion batteries, a lithium-ion battery works at 5-10 years, and that the warranties being issued or provided for by the dealers are 8 years to 10 years. And I myself, as an advocate and as a user since 2012, most of the units that I bought and I assembled are still working more than a decade already. So that's all we admit. No need to worry on those. As we knew it that we have to look at it on a long term, not on a short term. So when buying an electric, it would help you a lot in terms of benefits and savings that it would cost you.
From stock market strategies to the Proptech revolution and the future of electric vehicles, with Follow the Money's episode today and every day, we explored key trends shaping the economy. We continue to look into tomorrow's opportunities only on the Bilyonaryo News Channel.